KEF Connect. Conversations that matter. Tune in every week for interviews with industry trendsetters and community changemakers that will instill inspiration and ignite action. Visit www.kefholdings.com and click KEF Connect to listen.
Hi everyone, welcome to another episode of KEF Connect. Now, KEF Connect is a podcast by KEF Holding, and the objective is to bring a bunch of cool people doing cool things and get them to talk about how what they're doing in their industries is really shaking and moving things. Now, the topic of today is all about tech startups. You'd see they're all over the news, some of them really going for crazy valuations. So the idea is to gather a couple of people who are in the tech industry today and get to chatting all about the tech startup ecosystem here. For those of you who don't know, my name is Shereen, and I'm the podcast host for this season of KEF Connect. But it's not about me, it's actually about today's guests for today. So I'll be asking each of them to introduce themselves one by one. Shamim, why don't we start with you?
Sure. So my name is Shamim, and I'm the founder of Playdate. Playdate is an app that helps families build a social circle for their little ones. We are known as the Tinder for kids. We go from the age of 0, pregnancy, all the way to 12 years old. We love giving back to the community, and we're UAE born, female founded, and we're operating here in the US.
I was actually going to make a dating app joke, so I'm happy you beat me to it. I didn't know if it would be appropriate or not.
Totally appropriate, go for it.
Amazing. John, why don't we move on to you?
Of course, my name is John Santillan. I'm the co-founder of Denarii. What we do basically, we enable money transfer using a mobile app, a web, and an API to help consumers like expats, businesses, and financial institutions to send money internationally cheaper, better, with no hidden charges.
Amazing. Ali, over to you.
Hi, I'm Ali. So I am on the other side of the I'm on the other side of founders. I'm on the investing side. I've run a family office, and currently I'm an advisor with Klay Capital, which is a DIFC entity. And so we invest from angel up to Series C, Series D, and we participate that way.
And I'm assuming you invest a lot in tech startups, right?
Correct, in tech startups.
What percentage of your portfolio would you say comprises of investments in tech startups across the different stages of funding?
So it's a small percentage because on the risk spectrum, tech startups are on the risk side of things. So, and it's very limited to only a few investors who want to do that in the personal capacity or for their family office capacity. So it's a small portion, but it's a growing portion of that portfolio.
Interesting. And any particular industries within tech you think are booming here in the region?
No, that is, so the amount of money going into tech is just exploding in all sectors, but I tend to focus on healthcare and tech platforms. So B2B, B2C platforms. But there are VCs and angels that do different sectors depending on their expertise and their knowledge of that particular sector. So there are guys who do financials, tech, fintech, it depends. Healthcare, real estate, it depends on where we are.
So, pre-COVID, I actually thought fintech was the booming, and I look at John as I say this because Denarii Cash is a fintech company.
Yeah.
Kind of pre-COVID, everything was fintech, and naturally so, because the Middle East kind of runs on oil and gas and FS. Post-COVID, I've been seeing a lot of hype around healthcare, education, and the trends around that. Maybe, John, you can speak as a fintech entrepreneur. Do you think investors are less enthusiastic about fintech post-COVID?
I don't think. I think they see more opportunities as the impact of the pandemic or what's happening globally, right? I think, especially here in the Middle East, when the government actually mandated everyone to stay at home, there's no means to send money to other countries, and fintechs actually enable that means of sending digitally to your family back home. And I think fintech is still a hot industry these days. You look like a lot of companies coming out from the IFC, from Abu Dhabi, or even from Silicon Valley, for example, from the US, where the valuation is so high and there's still a lot of demand.
So high or too high? What does the investor say about that?
So there is demand. The amount of capital that is flowing into or looking for investments, whether it's angels or in early stage startups or even late stage startups, that has exploded. Globally, it's exploded, but in the Middle East, since the last 5 years, so you have lots of accelerators, you have a lot of hubs, innovation hub. I mean, the IFC is promoting that in a big way in terms of making it easier, cheaper, licensing-wise, and in every aspect, and also introductions to investors, and then you have incubators around. So that has exploded in the last 2 years, but the scene has been there for the five years, but not necessarily in fintech. It's been there in healthcare, but it was sketchy. And now it's become mainstream, like it is in the US or in Europe or in Asia, or in China, India.
How would you guys compare, gals as well, compare the regional, let's say, UAE GCC tech startup scene compared to the more, let's say, high-profile scenes like Silicon Valley, Singapore, London, and so on?
You want to go first?
Across the value chain, from fundraising through to actually registering your business, hiring talent.
I mean, there's a lot of factors in that question. So, I mean, I guess...
Pick one.
Funding. Let's start
Okay.
with that, right? I think funding, what's really interesting, if you compared, for example, Middle East from Southeast Asia, the government are very supportive in this region, right? I mean, they invite VCs and other family offices to come over and participate in the ecosystem. If you think about like 5 years ago or 10 years ago, you probably know like one or two investors in the GCC, and everyone knows them. But now there's a handful of VCs and plus angel investors, not only from the UAE, but from the overall GCC ecosystem. That there's an optionality now for the founders to look for the right partners to raise money in order for them to build their amazing product, their idea. So I guess to answer your question, Shereen, is I think there's a lot of opportunities from the funding perspective, but of course there's still some factors of building a company that can be improved, right? And maybe some of
Like what, for example?
I guess the improvement of like registrations, right? Company registration. I mean, 10 years ago it cost you, $500,000, not $500,000. I mean, there are 50,000 dirhams to set up a company. But I think this also improved where regulators from ADGM start offering a $750 or a startup license for you to set up a business, right? So this itself already improved, but if you look at from the overall global scale in terms of how much it costs to set up a business, UAE is still expensive. So there's still more room for improvement, and that's one of, I guess, example of.
So questions to the entrepreneurs then. When you were in the process of thinking, I want to set up a business, did you consider other places than the UAE? And if you did, why did you end up with Dubai or otherwise?
Are you both looking at me now? See, first of all, Playdate is not my first venture. So I am very familiar with setting up a company here, how expensive it is, etc. However, with that, there's so much opportunity. You speak of like cities like New York or Toronto, or I grew up in Auckland or Sydney or whatever it is. We still have massive gaps in certain areas that we can just take over. Now, the mommy community for me and the sector that I'm in, I had no doubt that Dubai would be the hub that I would start from. Safety, expats. All of us are expats, correct?
Right.
I mean,
Correct.
Nobody lives down the road from their families anymore.
My family lives here.
Yeah, see, that's a
I'm an
unique...
exception, though.
Okay, so I am the only one out of all my friends who has a kid. So straight away, it was a no-brainer that even in Dubai, like even the age group of people having kids and getting settled down was different. Like it's not like our parents and grandparents where everyone was married when they were like 21. So if Dubai was just a no-brainer for me. However, when I did get started, I did a lot of testing, obviously, because I didn't think anyone would put their kids on an app, and I was single at the time. And the US was my biggest market. International markets are a lot more open, especially the US. They're open to things, new concepts, new ideas. They're open to social media platforms, and the numbers are there for me to scale. But Dubai will always be my home because that's where I started from, and I'm very big on this being an Arab app by an Arab woman going globally rather than the other way around.
I'm curious, were your previous ventures out in Sydney or Oakland?
No.
No? Okay.
Yeah, my background's publicity and brand building and has been so for 15 years. So
Out of Dubai?
No, in New Zealand and then Dubai.
Okay.
But my PR firm is still based here. It still operates. We focus on startups and VC. So the whole ecosystem I'm very familiar with, and Dubai has amazing things to give. The UAE in general, with now Abu Dhabi markets launching and whatnot.
So one complaint I hear on the street is that finding tech talent is really, really tough. And that's because, frankly, you have India next door, where you get incredible talent for a fraction of the price. So often I hear that you get tons of people who are business people out here in Dubai. There's no tech talent. What would you guys say to that?
Again,
Where's your tech team?
I was just going to say, where's
Yeah.
your tech team? Yeah.
so, well, the question was actually my tech team are actually based out of Latin America and Eastern Europe as well. I think there's, again, it's the same conversation of, is there an improvement since the ecosystem or the government started supporting startup? Yes, definitely, right? There's still definitely a lack of tech talent, but I think not only the government are helping to solve those pieces, but also other startups in the ecosystem. Like for us, the way we do it is basically we invite in our engineers to travel here and to teach the other junior engineers and create jobs to make sure that we can sustain the talent in here, right? So we need to start somewhere in order for us to improve the overall ecosystem.
So have you tried to get them to move here, or are you okay with working with a tech team that's remote?
I think it's really interesting, especially given this type of environment. I think what's the good thing for startup is access to talent, especially engineers, is now much more accessible compared before. Because before you need to convince the engineers to come and work to your head office. But now it's not necessary because of the pandemic. This allows you to get access to talent in different parts of the world. This allows you to provide, and have more diversity within your team and the engineers as well. So for us as a company, there's no restriction for us for the engineers to come over. But as a founder, I think, and contributing to the ecosystem, I think it's my responsibility to give back to the ecosystem. For example, in the UAE or in the GCCs, to build a talent within the ecosystem as well.
I wouldn't put that burden fully on startups, though. I do see a lot of government-related initiatives to build coder talent and whatnot, kind of at a emirate and federal level.
Yeah.
Shamim, where's your tech team?
I can talk about this forever. See, I think one of the biggest things that you need to do as a founder, as soon as you start doing anything, is know what you're bad at, not what you're good at. So what do you not know? So immediately, as soon as I started Playdate, I wanted to build a cartel. Literally, if you think about how, can I talk about cartels here? If
Go
you think
for
about
it.
how a cartel works, it's literally a group of people who are super connected to make big things happen. Right? And that's what I needed. I knew that I was excellent at building a brand, raising funds and speaking to investors. I knew that I was going to eat and breathe and live this 24/7. I'm so hungry, you know what I mean? The tech continues to be one of the most vulnerable areas for me as a startup. Now, and this leads me to getting an investor on board. Every cent that came on board into Playdate had to have more value than just money. It had to have brains, especially now, because whoever's coming on right now is a key part of my cartel, right? So my first cash injection came from a VC, a venture builder called Modus Capital, based out of New York. Now that was perfect for me because they knew the US market and they had tech support. And now as we've just upgraded the tech and they've given me an amazing product team full of women, I focus on women coming on board, 80% of our employees being women, supporting women getting into tech. Now I'm looking for a CTO co-founder because what I realized is this is not an hourly job. I need a person who's eating, breathing, living this, just like I am from a brand building perspective and as a CEO, but from a tech perspective. And you know what? I really believe in the universe and subhanAllah, things just get attracted into your life. I had someone contact me on LinkedIn saying, listen, I was about to build this because I'm a dad and I was alone in the mall and I wanted to find someone to play with my 4-year-old. and I came across your profile, and I didn't think you'd reply, but listen, there's a 1% chance you might. I was like, perfect timing.
And he comes from a tech background.
He's a CTO, very
Okay.
well trained, etc.
Amazing.
I still believe in the power of 3, so meeting 5 people, interviewing 3. I'm still in the process. I haven't selected him, but it looks like, when you know, it's in you see the hunger, you see the ideas that they're bringing to the table.
Yeah.
That's what every founder needs in a tech startup. You need somebody who knows tech inside out. You need somebody who can tell you, listen, this team needs to move from Egypt back into India or South America, or let's build a network of women who are able to help us build this across the globe. Why not? It's 2021. Let's do it,
Absolutely.
So, yeah.
Yeah. Ali, question for you. If a startup comes to you, a tech startup, where their tech is outsourced and they don't have a chief technology officer who either is or isn't there at a co-founder or meaningful level, how would you take that as an investor?
So management teams are important. And coming together, why do management teams come together? What's the motive to come together? And how are they going to execute their vision? Is it a united vision, or is it one person's vision? And then, one of the questions that we always ask is who's on the management team? Who's going to run tech? Who's going to run PR? Who's going to run the customer acquisition side? Who's going to run the funding side? So if you don't have those verticals essentially covered within the core management team, that's a tough ask then. And talking about the Dubai ecosystem, when you ask the question, are there enough talent here? So you have to look at the evolution of the ecosystem here, right? So 5-6 years ago, people were not looking to start businesses here, but they were looking for entrepreneurs globally to bring that business here. So whether it was Abu Dhabi, Dubai, family office investors and families, entrepreneurs here were looking at global entrepreneurs saying, I use that product in the US, or I use the product in Europe. Can I bring that product here and offer it to the UAE or to the Middle East and then expand that? So they were looking for licensing agreements, outsourcing agreements to bring joint ventures, essentially, to bring them here. What has happened over time is that now the ecosystem is saying, no, we should be encouraging entrepreneurs locally. Let's have locally built companies to solve local problems. Okay, obviously, so it's a chicken and the egg issue, right? If you don't have entrepreneurs who need talent, the talent's not going to come. If you don't have funding for the entrepreneurs to think about starting businesses, you won't have the talent coming. So it's a process. And like you said, the cost initially was very high to even set up a normal business in the UAE. DIFC has done a great job with the innovation hub. You get a license, 800 dirhams, something like that. You get a co-working space, you get some support system, and then you get mentorship. And so first thing was to bring down the cost of operation of the startup. Second thing is to fund these ideas, have entrepreneurs come up with ideas to solve problems, fund those, and the talent will follow. So the next step is the talent will follow. And that's what they're doing right now with these announcements on these visas, right? Whether freelance visas, green visas, all of these initiatives that they've essentially was mandated or put on us because of the pandemic, right? That you can't have them all over the place. You need to have a core team here, and the core team should be where the client is. So that process is on the way. It's not going to happen overnight. So it started, is what I'm saying. We're at the early stages of tech being built here.
Absolutely,
and tech talent coming here.
Definitely. Now, when the tech talent congregates, how necessary do you think it is that the idea is original or taken from abroad and adapted? For example, I remember when Kareem first was established many, many years ago, people described it as the Uber of the Middle East. Or back when Souk was around, Souk was the Amazon of the Middle East. Now, these entrepreneurs who ended up exiting at, a huge valuation, didn't really create something new. They took something that was working,
Correct.
brought it here, maybe put on some Arabic words and branding here and there, and localized it, and made very successful tech businesses. So to what degree do you think you need to be original versus just find an opportunity and go get it, original or otherwise?
I think for me, I think if there's a problem to solve, I don't think it's necessary to be either a replica or something that was done already from other country and then put it in here. I think the main point or the main key here is actually, is there really a pain point on what you would like to solve? If that pain point can be solved that was already solved from somewhere, then it can be tried, right? So that's how would I take that question.
Let me touch on a topic, failure. So I often find that not even 1 in every 10, but a very, very small percentage of entrepreneurs who get up on demo day and pitch then actually make it.
1 in 10.
1 in 10. So that's why I said this is 1 in 10, but I've been to so many demo days, and trust me, a smaller percentage than 10% make it. So as entrepreneurs, how did you kind of brace yourself with the thought of potential failure going into your businesses?
See, this question for me ties in with your previous question because Playdate is a unique concept and it doesn't even exist in the US. Now, I nailed it with the name, immediately you understand what it is, but I think it's made my job a million times harder, and I see this every day. Investors are like, can you give me an example from international concept? No, because this is unique and it's from here and it's working in the US. Can you tell me, okay, no, it's not going to work. So I came up with Playdate in 2016. I built a beta by 2017. By the way, not funded. Yeah, like literally selling my soul. Bootstrapped until recently. Because I wanted to show investors that my money is on the line before theirs. And I'm a typical woman. I'm super careful and I did my research. I did everything possible to make sure that my concept is, I might fail now, but after 5 years of eating, living, and breathing this, the chances are very low, I think, obviously. An entrepreneur never goes into anything and spends a lot of time on it unless they're stubborn, and they knowing that they're or thinking that they might fail. And I get asked this question all the time, when are you going to give up? I'm not going to give up because it's going to work. I know this. Otherwise, I wouldn't have invested every cent I own on this. When are you going to, Shamim, stop? Look, sometimes I get lower and I do stop for like a month or two when my momentum goes down. But right now, there's 2 problems I'm solving. People don't live near their families. People are having babies. Family sector is a sticky one, and brands are dying to reach consumers at home. They're dying to engage with real consumers. The concept of influencers is a questionable one right now. People have finally spent so much money on it, they're wondering, is this even working? Well, every mom is an influencer. Every woman in her household is an influencer. So how do we get to her? Playdate.
I want to pick on something you said.
Go ahead.
You touched on, let's say, having periods of time where you're not as active, let's say, or not as enthusiastic. When you do have funding from investors, how do you manage expectations with investors when it comes to growth and growth projections and whatnot?
Oh, this is before I got anyone's money. This is the thing. Okay. I didn't take any money until I was absolutely sure.
So now that you have external funding, what is the process behind you and the investor establishing, let's say, targets that are realistic and then being held accountable to it?
So this goes back to choosing the right investor. My investors and I are like getting an investor, especially your first round, and I've only had 1 round, by the way. So I'm very close to them. We have very similar thinking. We have very similar, if they're like no about something, I'm like cool. Like you have to be open to taking criticism, but because they're experienced, they're not random people that just have money. Do you know what I mean? And that's why it was
this part of the world.
I mean, I don't mind random money here and there, but
you want smart money.
In this round particularly. Absolutely. Now that I have these guys behind me, I feel so much stronger. Like from a financial perspective, we're going for a huge round next year, Q1. I'm still closing this round. But what I'm trying to say is our expectations, and I set my own KPIs. So personally, I think you probably do the same as a founder. I have very solid KPIs. If I'm doing it by myself, and I do a lot of things by myself, like I have a workshop next week for moms. It's a full week full of speakers in 72 hours because I work nonstop, and that's what you do when you believe in your product, and that's what you do when my product has a lot of social impact, and that is important to me.
So question, when you're hiring people, how do you get them to work with so much passion, as the passion that I see you, that's slapped all over your face right now?
I have fire in my eyes. How do you find the right...
or rather get them to feel the same way about your company, right? Because you need to motivate people to love your baby as much as you love your baby.
Do you want to go first?
Well, it's an interesting question. I mean, I think it's an ongoing, I guess, even for myself, it's an ongoing self-improvement to attract talent to my company, right? I think the way I do it is basically, tell them the problem and how are we solving it. In our case, we're not only like building a technology, we're solving a human problem. I mean, being here in the Middle East for the last 15 years, everyone have experienced, sending money to their home country and touching that emotional aspect and how we would like to solve and inviting them to solve this bigger vision or idea of for the community will easily, I guess, for me to find out if there's an interest for them to join, right? And I think again, it's more on a gut feeling if you can feel that this is the right candidate or is the right person to work with.
So other than believing in the product, how do you, I mean, I know that the promise of ESOP and getting a piece of equity in a startup is something that is appealing for a lot of talented people. How do you go about kind of giving them that skin in the game?
I think, I think for me, I think it's just more on, I mean, to have an accountability, I think it's just more on thinking about what are the opportunity, what are the opportunity from the market, right? And that opportunity will turn into an action list that both person or both individuals agreed to meet. And fortunate enough, the team that I do have is, and kind of moving one step back, is it's not the first company that I built. It's actually my fourth company that I've started already. I mean, those three becomes a lifestyle business and some becomes failure as well. And I think I've already shown the commitment, not only me but the team that I have to focus and to solve a problem that we really want to solve. And I guess for us, the opportunity that we're seeing, it's just more on a bonus, or it's more on a bonus for us if it becomes successful. But I guess for us, we're more tied into the problem that we would like to solve. And the way we would like to solve these things is the system is broken from the financial aspect in terms of the cross-border payment, and we can do this by building this technology. And
you therefore recruit believers.
And
yeah. Ali, how do you go about as an investor managing with the various entrepreneurs whose companies you invest in, the expectation of you as an investor versus the roadmap and traction and where they're at?
So, I mean, so before we even get to all of that, because that comes part of the initial due diligence on the entrepreneur. So there are very few questions that you need to be prepared when you go to see a VC or an angel. And those questions are, essentially, what is the problem you're solving? Okay, if there is that a real world problem, and how big is that problem? And how fast can you scale to solve that problem? Is there a market for that? And then, what is your solution? Okay, it can't be just, and is there an existing, what is the competition in offering that solution? So is there something existing that I can look at? Okay, is your solution, is it disruptive? Is it derivative? Or is it a substitution? So you need to know competition as well. And then it goes down to, is there a market for that? And how big is that market? So what is the problem, what is the solution, how big is the market, then what is the competition, essentially, and then management team. So if you have, and then the forecast, and who are your early adopters, what is the market that you're going to go after. So these are at least, when I meet entrepreneurs, I tell you need to have to answer these questions up front. When you're taking a meeting, you meet, and angels and VCs, not here locally, but globally, meet so many pitches that you need to answer that question up front. If you have those
in 5 minutes or less.
Yeah, in the first 10 minutes,
Yeah.
otherwise you lose me.
Yeah.
Right? If you can't answer those questions up front, and, then the conversation doesn't go anywhere. But if you do answer those questions up front, what tends to happen is that then I believe you, and then I'm looking at the manager, I'm looking at the history of the manager, I'm looking at his background, I'm looking at his motivations, and once I'm comfortable with that, then the hand-holding, then I have to buy into the vision of that. I have to understand that vision, right? Mm-hmm. And I have to know something about that sector that it is there. So even sometimes when VCs are raising capital, they need to know who entrepreneurs are raising capital. They need to know what kind of VC they're approaching. Is this VC understand my sector and what I'm trying to do? And the marriage is there. Once that's there, then investors and VCs and angels are very supportive. And then you don't need to answer your question, you don't need to have these, hand-holding. Because then you're bought into the vision. And then you let him drive it, because he's the driver of that vision, not me.
So on that point, do you sometimes find ego can be a problem amongst entrepreneurs?
Absolutely.
How do you deal with that?
You don't invest.
Okay. Right. What if the ego develops over time?
So that, understanding the motivations of the entrepreneur, and understanding the background, and understanding that the passion of the person, you are willing to deal with some ego. In finance, in entrepreneurs, if you don't have that ego to do it little bit, you have to have a little bit. Yeah, you have to have everything in balance, right? You can't be, passionate about something and then not have a chip on your shoulder, because then why am I investing? So it's a balance. You need to find that, and then you're okay, and then you have to deal with it. Every entrepreneur is different. The emotions are different, right? Their sensibilities are different. Their center of balance is different. So those are all things that you deal with post-investment, right? Upfront, you need to know. You need to answer those 4, 5, or 6 questions. You get to there. Because if you're an angel, even in terms of forecasting, right? A lot of people fall flat on their face when you actually have to put up a forecast. You have to put up your target market. You have to put up who will be your early clients. Is a subscription model? Is it a buy and pay as you go model? So all these things, right? And what tends to happen is after you invest in the first, when they need to report numbers in the first forecast, maybe 6 months down, they tend to underperform, which is fair, which you expect, because also there's a fake it till you make it, right? So you say my forecasts are conservative, but they're really not, and when you see the first financials, you find out, okay, you underperform, which is fine, which is all part of the game, right? But you can fake it till you make it to a point.
Another question.
Sure.
If you are in an investment where, let's say, X number of tenor into the investment, as a company you decide, this was a bad, investment decision, how do you exit?
You don't exit.
You don't. Okay.
So coming to that, right? So there are a couple of models that people use to invest, and those models are so let me talk about just success failure rates and how you look at it.
Is it 1 in every 10?
So there are a couple of rules of thumb for VCs, right? And that's one third.
We're getting the inside here.
Yeah.
So there are two things. One, people say one third. That is, one third will be successes, will actually give you a decent return. One third will just give you your capital back, and one third will fail. I don't think that's one model. The other one is 80-20. 80% of the companies that you invest in fail, right? And I'm talking early stage, angel, Series A, right? 80% will fail, and 20% will succeed. But those 20 will cover the losses of the 80. Okay, and then when investors invest, keeping those two models, depending on which one you buy into, you invest in two ways. So one is that I look at hundreds of pitches, okay, and I'm willing to put 100,000 on a business plan or a person that I like, and I'm going to make 100 of those investments, right? So if I have $5 or $10 million to spend, I'm looking to fund that many entrepreneurs, I do that, right? So and then if you take the 80 model, which I believe in, 80-20, if I do that 100 million, 100,000, 100 investments, you get to there. Then you say that 2 million success out of the 10 million I put to work, 8 million is going to fail. I'm going to lose that 8 million. But that 2 million that I invested, which is 20 companies essentially, those will return me at least 2 to 3 times my capital, or even more, right? And so that covers more than 10 million. And I expect, I don't expect 2 to 3 times, obviously I expect much more from those companies. And then I think, okay, fine, out of that 10, I'll get 20, my total return over time will be $20. So I'll double my money at the least. And also, it depends on where you invest. So there is, PitchBook data, Preqin data, which are, companies that track VC investments and technology investments across the globe. The biggest payoff is for Series A. Series A failure rate is the highest because you're funding it very early in the stage, but the return is the highest as well in Series A. But then by the time you get to Series F, they've raised a lot more money, but the return is obviously lower because the risk is lower. So the risk spectrum is important to understand, right? So that's how you invest. And then that's one way to invest, is that 80-20 model. Or then the other way to invest is saying, I will only look at companies that have gained traction, that have a proven model. I'll not invest I will not be an angel. I'll not invest in Series A. But Series B, C, and D offer me a lot more, because now I have financials, I have a management team in place, I have a proof of concept, and then I'm willing to take a lower return, and I will pick and choose. I'll spend a lot more time on due diligence. I'll do operational due diligence, financial due diligence, I'll do management background due diligence, and I'll spend a lot more time. I'm willing to put more money, not the 100,000, but now I'm willing to put 250,000 to $500,000 in the Series B or C, which tends to be a little bit more growth equity because they've had previous rounds. And then I expect a lower return. I would not expect 10 times my capital on the 2 million, but I would expect, I think the failure rate is still equal, 80-20. But I expect to invest lower, bigger, chunky, and less companies, and expect a better lower return in absolute terms.
Interesting.
But it's still a significant return. So in terms of return, I'll just give you some data. PitchBook talks about Series A on average, and this is companies since 2009 up to December 2019. Series A returns about 23% annualized, right, over that period. But Series B and C, they also return decent money. Series B is close to 18%, and this is all PitchBook data. And Series C is closer to 16%. But then, obviously, over this period of time, annualized returns, yeah? So IRR returns. And there can be different multiples of capital, right? But then Series F and ahead are lower because, obviously, the business model is well established, etc.
Now, for the average retail investor who may be listening to this, thinking, ooh, these are attractive returns, I'd like to invest in some companies at these stages. How can a retail investor?
Very hard.
Very hard.
It's not a retail product.
Unless they, I mean, so a platform that comes to mind is a platform that could be an equity crowdfunding type of platform in which you can get in.
Yes, so retail investors should invest in funds or these platforms where there are multiple companies and somebody you have a management team of that fund who's essentially experienced in funding companies and running companies or investing in companies. So that's the best way retail investors can do. And by the way, it's very hard. It's very hard to fund.
Oh, I'm sure.
To
Otherwise,
understand.
everyone would open their own VC.
And,
Yeah.
and also, returns have been sketchy. They've not been linear, right? So you've had a period where you didn't do well in VC. You had the .com side. You did really well in VC in that period, and then the .com bubble happened, and then you really didn't do well in VC for a long time. And even funds gave meager returns. You were better off investing in the S&P 500, for example, right?
Different people have different risk appetites.
Exactly, and then you had a period after the global financial crisis where people didn't want to risk capital in VC, so there were a few. But those are opportunistic times to build businesses and to fund good entrepreneurs, and a lot of people got funding then who did very well. And now this is because of the amount of liquidity available today. There is a lot more activity and there are a lot more exits because the public markets are so open, people can go IPO, and there's a lot more capital being raised by the funds, so there are a lot more exits, there are a lot more strategic buyouts, and so those avenues of exits have opened up, and that's why you're seeing that much interest, because also the headline
with
is
the crazy
there.
valuations.
And the valuations are crazy, and that's why the headline is grabbing. Everybody's grabbing that headline, and people are like, "Oh, I want to invest in that." That's why you're seeing more and more investors come in. But usually, I feel that when everybody is focused in one area, that's when you need to be a little bit worried, because too much capital, and then you can have issues with everybody wanting to do a startup, and not all ideas are great. So when there's lack of capital, the best ideas win. When there's too much capital, every idea wins. So this is a good time to raise capital, though.
Yeah. So here's to more, tech unicorns out of the region.
Yeah.
Thank you all very much for your time. For those of you tuning in, I do hope that you've learned a little bit about what's going on in the tech world from an entrepreneur's point of view as well as an investor's point of view. We do hope you've inspired you. KEF Connect has several episodes out. You can watch episode recordings out on their YouTube channel or listen on any podcast streaming platform out there, Apple, Anghami, Spotify, you name it. Thank you all very much for coming and being part of the conversation.
Thank you.
Thank you
Thanks
very
for
much.
having
Thank you, of course. And thank you all very much for tuning in.